Do you have the wrong bucket for infinite banking? Hi, I'm Sunny Mitra, the founder of Bright Horizon Wealth. We teach entrepreneurs and go-getters like you how to own their own financial future with the concept of infinite banking. So make sure you subscribe to our YouTube channel and hit the notification bell so you can be notified every Tuesday and Thursday we come out with brand new videos. In our previous 4-part video series called Infinite Banking for Dummies, we discussed what is the best way to purchase a car, whether you should pay cash or finance it. Then we discovered that apart from these two popular methods, there is a third alternative which has not been exposed to the general public simply because it is not in the best interest of those banks. After that series, we got a lot of requests from our viewers like you to explain more about the 3 buckets strategy. In today's video, we are going to dig a little deeper, which will help you find it out for yourself whether you own the right bucket or not. As we all know, there are basically 2 categories of people when it comes to money management. The first one is a debtor and the second one is a saver. As you can see, there are 3 buckets on the screen: red, blue and green. The red bucket represents a debtor. A debtor is someone who borrows money from a creditor, has no savings, earns no interest, and they pay interest. And the continuation of this cycle over and over again keeps us in debt perpetually. The reason I made the color of the bucket red is because whenever we are in debt, we are continuously thinking about one thing: how do I get out of this debt? Remember the feeling? And that is where infinite banking comes into play. Infinite banking slowly but surely pulls us out of debt and also creates a source of a passive income for us down the road. The blue bucket symbolizes a saver. Now, if you are a saver, you have the discipline to save the money. You save money for a better future. You are not afraid of sacrificing a lot of instant gratification today in order to have a better tomorrow. No wonder our society respects savers and talks very highly about them. Now, let us see how this blue bucket theory works out for the saver. You fill up the blue bucket and then empty it down, and then you start filling it up again. So basically you go through a cycle called fill, empty, fill. Let me give you an example. Let's say you want to buy a car for $20,000. You start saving money for that beautiful car that you have in mind. Say for example, it takes you 5 years to raise that money. Now you have $20,000 in your hands. You went to the dealership and bought your dream car. You do not owe a penny to the bank. You feel like a winner. But then the next day, when you go to the bank and look at your savings account, you discover that it is empty. Do you remember the pain of seeing your bank account emptied up all the way? And you asked yourself, do I need to start filling up my bucket all over again? You took out all the money to buy that car. Now you have a car which is paid off, but you don't have the cash. When you'll need another car 5 years later, you'll need another $20,000 cash to buy a car again. So what do? You start saving money for that second car right away. Once again, you start going through sacrificing your today for a better tomorrow. And this never-ending cycle keeps on going, only to bring you down to zero every time. Now, for savers, we repeat this over and over again. So, I'm not saying it's a bad thing to save money. In fact, in order to achieve financial freedom, we do need to save money. But my question is, for how long? If we keep on saving for the rest of our life, we're missing out on our today. You see the point? All I'm saying is we should not deviate from the bigger picture, and the reason we do not know any better is because we have never been taught. Most people do not know that there is a third alternative out there, and it is the green bucket strategy. The green bucket represents a money maker. As a money maker, you use other people's money, OPM, and then recapture your principal and pay all the interest to yourself instead of paying it out to others. If you want to learn more about it, please watch our on-demand masterclass which explains it in a more in-depth setting. What are the characteristics of a green bucket? There are two big ones. As a money maker, you own the bucket and it does not have any holes in it. Yes, you heard me right. You own the bucket, and instead of putting your own money into it, you use OPM, which is acronym for other people's money, to fill the bucket up. This is how it works. Number one, you finance the car with other people's money. Number two, you recapture all your principal. Number three, you pay the interest to yourself, not to them. In other words, as a money maker, you stop the leak in the bucket. Yes, whether you use red bucket or blue bucket, both have leaks in it. It has a small hole at the bottom which we do not pay attention to, even though it is right there in front of our eyes and is bothering us all the time. You got it. I'm talking about the interest that you are paying for month after month, year after year. Now you may ask, but Sunny, I understand a debtor has a leak in the bucket, but how about the saver? He's not paying any interest. How he could have a leak in the bucket? Good question. And the answer to this is, a saver is also not too much better off because of the lost opportunities. Think about it for a moment. If you have $20,000 in cash in your hands and you invest that money somewhere, you will make extra interest on it, right? But if you buy something with that money, you lose all the interest that you could have made on that money. In finance, this is called a lost opportunity. So either way, whether you borrow or save, you pay the price with lost opportunity. So let me ask you a question. Who do you think is better, a debtor or a saver? Neither, because they both end up at zero. I'm going to repeat, they both end up at zero. So choose your bucket wisely. You are still financing your purchases regardless of whether you are a saver or a debtor. And by financing the car, you are either paying interest or you are losing your opportunity to earn interest by paying cash. All you need to do is go to Google and ask this question: how much does the average American pay in interest in their lifetime? Do not be surprised if the answer comes out in between $280,000 to $450,000. All we need to do is start paying that interest back to ourselves instead of our creditors. Can you see the potential of $300,000 that can increase multifold in your lifetime with the law of compounding interest? And infinite banking is the vehicle that can get you there. This is the magic of compound interest, which over the years makes a big difference. And this is the huge amount of money that will come with certainty without working any extra hours, just by stopping the leak in the bucket. If you are interested to learn more in depth on how compound interest works like magic and how easy it is to become a money maker, then check out our masterclass with the second link in the description below, and make sure you own your own financial future or someone else will.